What is up, everybody? Michael Silva here, going to be doing a technical analysis update on the S&P 500. This, we are looking at SPX. It is the S&P 500 index. If you haven't seen yesterday's video, go ahead and click the link in the description and I kind of walk you through my thought process. Today's going to be an update on that video. It's only basically one day later, or one trading day later. I'm going to be going into the smaller time frames. What you're looking at is the daily. I'm going to be going into the hourly and then also the 5 minute, because I just want to show you something kind of interesting and break down my thought process of where I think this is going. Currently, we're still within the channel that I drew out on the previous video. Very close though. I mean, it went above it and then it kind of pulled back towards the end and it's kind of just sitting right at resistance. So let's go ahead and hop into today's analysis. So I want to point out a couple of things that I think are pretty bullish. So far, it has been in this up channel. So I had this originally kind of at a ascending wedge. I am going to go ahead and put it as an up channel now. So if you really look at the overall context of this pattern, it kind of looks like a bear flag. You see this pull down, right? You can even go to the top if you really want. And this pull down, and then you see it's been trending in this channel upwards. So to me, overall context there would be a bear flag. Now, it has, like I said, been going up, and then you have this very clear channel that it's been trading in. And I'm trying to think of, what would be the reason why it's trending sideways, right? If it's been going up and now it's all of a sudden going sideways. And I think I'm coming to this conclusion that the reason why we've been seeing it go sideways is because we have a very, very dense earnings seasons that is still kind of coming. And what I mean by that is the big tech sector stocks like Faang. Like, we had Netflix's earnings and it came out as revenues grew by $1.2 billion. We have Apple and Amazon's earnings report coming out the 30th, and we have Facebook on the 29th. These are, I believe, close of business when they come out. So I think that there's been a lot of anticipation, and what we see in this channel could be just sideways action, anticipating what's going to be coming. And here's my thought process, especially with what I was talking about in the previous video about how the Fed stepped in with a lot of stimulus during this pandemic and has been pushing the prices up, even though the fundamentals just don't even really make sense at this point. I think that no matter what the earnings report is, I mean, it just seems to me that good news is good news and bad news is still good news, because if they even report bad earnings, I feel like it's just going to be chalked up to the pandemic that's going on. Like, oh, it's only temporary because of what has been going on, which might be the case, might not, but after all this blows away or we start rebooting the economy, are we going to continue to see the damper take place? So Facebook already is, there's been some articles out saying that their ad revenue, which is that's where most of their revenue comes from, is down 20%. I just don't think that small businesses are going to just pop right back up and start bidding up those auction prices for ad revenue. A lot of this doesn't make sense, so I am literally just sticking to the technicals of everything because that's what I know, that's what I understand, and like I said before, I am a momentum trader, so when it breaks certain areas, I'm there to trade into the momentum, and if it goes down, I'm there to trade the momentum. I don't care if it goes up or down, okay? I am really unbiased to that. I just look for the good entry points and good exit points. So with that said, let's go ahead and hop more into today's price action of what I see. All right, so I just zoomed in. This is a full day on the 5 minute time frame, and you might be like thinking, well, the 5 minute time frame, why that? You might be a long-term investor, you might not be, but this is really just to show you why support and resistance really matters within technical analysis. So we had the gap up this morning, right? And it just kept on moving up, okay? Didn't quite reach this area of resistance at this point. I would chalk it up to like, that's pretty darn close, right? We're at like basically 28.78 right around here. But then it pulled back, and then look at this candle that formed, okay? I'm gonna zoom in. This right here is known as an inverted hammer or a wolf candle, a reversal candle. There's so many dang names out there. You can complicate this as much as you want, or you can keep it simple. I always say that. I like to keep things super simple. Clearly a reversal candle, and I was responding to comments during this time, and I did enter in a put entry right around this candle and made a quick little profit there on this downstream. So it pulled back from that reversal candle, and then it was kind of trending on the 50-day period moving average, and then another reversal candle right here, but guess what? It's not like it played out because it finally broke through the resistance, and when resistance is broken, it becomes support. So, and also when it becomes support, typically what you'll see happen is back tests take place. And that's exactly what took place. You came back and you saw this back test, and then you see it move up more to the upside. And towards the close of the day, you see it then pull back and land on the resistance. So it's like, it's just sitting there. It's just sitting on resistance. Now this is the 5-minute time frame. It curled over. You don't need to put too much weight on the 5-minute time frame. I do as a trader intraday, but let's go ahead and go to the 1 hour. I just thought that was kind of cool, so I wanted to share with you. Now the 1 hour time frame, the day starts right around here, you know, this is very similar, and then you see it kind of this pull up, and then it's, you know, a little flag. You can call it a flag, you can call it a bunch of things, but here is one of those candles. See this candle right here on the 1 hour? That is one of those reversal candles. So is this an indication of what we might see happen tomorrow? And tomorrow's Tuesday, and Wall Street calls that turnaround Tuesday. So we might see that reversal take place. It's at the top of the channel, so we might see it pull back in the channel. It could be in this channel for weeks for all we know, but that's hearsay. The MACD is bullish. It's above zero. It does look like it's losing some steam, like it is kind of trying to curl over a little bit. It's really too early to tell right now. We're gonna have to see some more data come out. So that was the 1 hour time frame. Very interesting. It's literally right there at the resistance, which it could be now technically support. I would chalk it up as it's just like, you know, it's like a doji candle. It's an indecision. It's trying to decide whether it's going up or it's going down. So we have to wait till tomorrow or even after hours to kind of really watch and see where this takes place. I can assure you, as of right now, I am not in any trade, especially overnight position, because right now a lot of things could happen overnight. Now what I mean by that is I'm going to zoom out to the daily to explain that a little bit better. So we're back over here at the daily chart, and the other day on Friday when I did the analysis of the S&P 500, this was more curling over to the downside, and now it kind of looks like it bumped up a little bit, like it's gaining some momentum, some traction, and that could be because it gapped up and it moved all the way up to the resistance. Now, you got to think of whoever is shorting the market right now. You got to put yourself in their shoes, okay? And if you put yourself, if you're a bull, put yourself in their shoes. Even if you're a short, put yourself in your shoes, I guess would be. You got to think, if they're shorting right now or building a position up, where would they feel comfortable with a stop loss? And the thing is right now, they're probably, if they've been building a position in this range and the price is right here and they're still in it for short, they're probably biting their fingernails right now like, oh gosh, oh no, I'm worried. Oh no, please drop down, right? So I would have to assume that their stop losses are right here around 2,900, maybe just above that, because it is a pretty round number. And to be safe, you want yourself, you know, behind that wall. So I would say 2905, 2910, 2915, right around that range. I would say that's where you're going to have a lot of stop losses. So if this price can break through those stop losses, and you also see the MACD on the hour that was kind of curling downwards, that's going to create a lot. It's gonna basically create a lot of buys taking place. So the shorts are gonna have to cover, and then you're gonna have momentum traders moving into that action, which is inevitably gonna squeeze the price higher. Okay, it's gonna move fast to the upside. And if it moves fast to the upside, you need to look for your next target. So as of my opinion right now, it does look like from today, I don't know where it's gonna open up tomorrow, to be honest, it's been crazy, but it looks like the bulls have taken charge of the S&P 500 index. So now that doesn't mean it's going to turn around eventually, but I'll get into that, like kind of the risk aspect of all of this. So if their stop losses get triggered and you see a squeeze to the upside, what would be the next target? I mean, a clear defined area is the 3,000 level. I mean, you have the 200-day period moving average, and then it's like a big round number, 3,000 sitting right clearly there. And if you zoom back out of the chart, you'll see data points previous throughout history right around that range where it acted as previous resistance. So that's going to be a huge level. If I were to trade this, obviously I trade on the 5-minute time frame, I trade the momentum. So if I see this squeeze take place, if I see a break above this tomorrow, personally I would like to see it below the resistance open below the resistance, but then break above it, because then I can capture and I can start moving into that momentum and hopefully get in right before the shorts start covering, because then you can see that big move up to that upside. This $3,000 level right there, I would probably consider shorting depending on, you know, what is taking place then, but that's going to be for another video update. So the last piece I want to cover is the potential of another massive stock market crash. And the reason why I want to do this is because it is still a high probability, and it's very possible that we can see another leg down. If you look at bear flags or even bull flags and how they form, keep in mind that a lot of the time, so if this is a bear flag, when they break, you can see the length of the pull on the break. You can see the next leg be as low or as aggressive as that move. So I mean, that'd be 1800 if that was the case. Now that's not 100% accurate, but it is and has proven to be a decent measure. So my question that I want you guys to start thinking is the risk of going long worth the reward? So think about what is happening and taking place in everyday life. Okay, we have a lot of stores closed. We have a lot of companies struggling, a lot of small businesses failing. You see massive job loss. You see all this stuff taking place, and yet we see the economy going up, right? So when the economy opens up, and say if it goes up to its previous high, do you really feel comfortable knowing that all these companies and all these people are struggling, but yet this price is still moving to the upside? Is that risk to start putting in more and more money to build a long position? Is it worth the risk of potentially it all collapsing? So that's what I really want you to leave you with today, is the only thing that we have control of, and I mention this a lot in my videos, the only thing that we have control of is our risk. So this is not about being right or wrong. Like I'm assuming that you want to make money as a trader or a long-term investor, etc., etc. But the thing is, where there's a winner, there's also a loser. It just depends on what side of the coin you want to be on. And to be on the right side, you really have to understand managing risk. So personally, to me, I don't think going long right here to potentially get that type of, and by long, I mean an overnight hold, okay? Holding the position overnight, especially in all this uncertainty. I'm not gonna do that. I'm not gonna hold my trades overnight until I get some clarity. So is that risk to maybe make, you know, just say 10%, 20% even? Is that risk to make that worth the potential of that downside drag? Now we've seen how fast things can drop, right? Stocks typically take the stairs up, but they take the elevator down. So if you were to wake up and see that big drop, would you be affected? Would you be impacted? Would it wreck your day? Would it wreck your life? That's some things that you need to consider while trading. That's all I have for you really today. It's going to be interesting to see how this little channel plays out. It does look like the bulls have taken charge. Okay, above the 50-day, looks like it's breaking resistance. We still have Tuesday to come, turnaround Tuesday. That's all I have for you today. Leave your questions, concerns, comments, emotional outbreaks. Thank you so much for the support and the recent subscriber blow up. I want to, welcome the new basically 1,500 subscribers from yesterday's video. That video had over 30,000 views. Thank you so much. And I know that a large percentage of those people know a lot more than me, so I do appreciate you coming by and leaving comments, giving me some feedback. Everybody have a great day. See you tomorrow. Hope all is well. Bye-bye.